Hello and welcome to Inderes TV. Today I'm here with Analyst Pauli Lohi to discuss Hexagon. So Pauli, I think you used the word cyclical headwinds continued in Q3 and a material recovery might take longer than Q4. Is this just about cyclical headwinds or is there some bigger problem in the background?
Well, I definitely think it's about the market cycle. There was still weakness in the construction markets in the EU and China. Of course, in these end markets there could be some more prolonged issues, but I still definitely think that we are now in a low cycle and there will be a recovery at some point. Then there's also weakness in another important end market, the automotive industry, especially in Europe. So these are cyclical markets, and the hardware sales has been suffering for that reason. Well, if you look to recurring revenues, which includes software and services, that still grew strongly around 7% organically. So I think that the company's quality of revenue is still improving, and they will develop well in the long term.
Yeah, so it's clearly more a cyclical problem, and we might, like, the recurring revenue is strong, and we might see once we clear this year, it might be, if the cycle turns, then we might see better development.
Yeah, the industrial investment fluctuates over time. So now we are in a low cycle after good years in 22 and 23, first half.
Yeah, so it's natural that we get a weaker cycle in between. And as you said, the revenue mix improved and it contributed to a significant increase in the gross margin. Could you explain a little bit more about that?
Well, the hardware sales were declining and software revenues were growing well. So the most resilient part of the business is actually the most profitable. So that improved the margins.
Okay. Hexagon also announced a plan to potentially spin off certain fast-growing, highly profitable software-focused parts of the group, possibly into a new entity that could be listed either in the US or Sweden. What do you think about this?
Well, Hexagon has been built on around 200 acquisitions, so it's a rather large and complex company in that sense. Some of these businesses have synergies with each other, but then there is businesses that don't have synergies with each other, and the rationale for this proposal was that the company is pretty complex, and there is two units that could be developed better in the long term with more focused structure.
Yeah.
So they are planning to spin off a selection of mainly software businesses that are used for design and management of industrial facilities. So this is a faster growing unit than the rest of the group, and I believe that this part that will be spin off could be grown further with more acquisitions still. So probably it makes sense to focus on the special characteristics of these two businesses, and that could also boost the organic growth in the long term.
Yeah, so looking maybe for better growth in those parts by separating them so that they can grow better independently.
Yeah,
streamlining
the management
structure.
has more focus then. I think this makes sense, but I don't see any immediate release of hidden value. I don't see that. It's more like then you have better chances to develop them in the long term.
Okay. And then finally, what's our valuation and recommendation for the company at the moment?
Well, it's trading around adjusted EV/EBIT 18, which is definitely high level compared to the average, but for Hexagon it's actually bit lower compared to the past 2 years, and I think I normally would consider this a fair level for Hexagon. It's been maybe around 20 in the history on average, but maybe 18. I see that more kind of a normalized valuation level, and of course it has become larger, and the growth profile probably it won't grow through acquisitions as much as in the past because it's so big already. Well, I still see that the earnings growth will pick up materially next year, and that will push the valuation to lower at EBIT 16 next year. So then I see some 10% upside in the share. It's not super high, but I think it's decent expected return for a high quality diversified company like Hexagon.
Yeah, and the recommendation at the moment?
Accumulate.
Okay.
Yeah, so we are in the positive side.
Yeah, thank you, Pauli. So some upside in the valuation for next year and accumulate recommendation. You can find more about the company and read the latest research at inderes.se.